Hello everyone. Welcome to the PivotBoss Monthly Market Outlook for the month of April and for Q2 of 2024. Thank you for joining me this afternoon. My name is Frank Ochoa, also known as PivotBoss, author of the book Secrets of a Pivot Boss, and I'm excited here to jump back in the saddle with you all for another monthly outlook here. The last one we did was back in January. We did kind of a quarterly outlook, not only for the month of January, but also for all of Q1. We'll cover some of the candidates that we talked about at that time here in a little while, as some of those candidates did quite well from what we were expecting. The goal here for today is to provide some actionable opportunities here from kind of a short and medium term basis over the course of the month and over the course of the quarter. For those of you that are more short-term oriented, we'll have some ideas there, something that can be actionable as soon as tomorrow. And for those of you that are swing traders, over the next week or two. And then again, for those that are more active traders, position traders, we can look at opportunities that could play out throughout the quarter for some nice gains. We're going to be looking at futures markets. We're going to be looking at some of the crypto stocks, the crypto markets, and also stocks. And I have a list here of various candidates that we'll be covering here. But if you have anything that you'd like me to take a look at as we go along, if you have any requests, we'll definitely put those in as well. So if you have any requests that you'd like me to take a look at, just enter it in the chat. I know some of you are joining me via the Zoom chat. Some of you are in the trading room. I'll be monitoring both chats there just in case there are any questions as we go along. If you have any questions at all, again, feel free to ask away, and we'll cover those as we go. But a lot to cover here today. Usually we try to go about 90 minutes or so. Not too long, not too short. Cover a ton of charts and a ton of opportunities that you can then play back and rewatch and find some of those gems here that can help you make some money here over the course of the month and over the course of the quarter. So having said that, let's go ahead and get started with the April monthly market outlook for 2024. The first chart I always like to start with here is the ES. Tremendous trending market, unlike anything that I can remember in a good long time, especially from the Q4 reversal, the check mark outside quarter, which we were looking for in our quarterly report there back in October. We were looking for a Q4 to be bullish. We were looking for price to take out the quarterly low, and we were looking for price to rally to the quarterly high for an outside quarter. We got that. There was a little hiccup at first. We dropped, and then we saw the tremendous rally that happened into the end of the year, especially after the FOMC meeting that came out in November 1st. That FOMC key level there has been naked ever since at 42.30, and we have seen since new highs month over month, really week over week, until we hit 53.33 half just yesterday. Incredible trending market, a lot of bullish trending principles that we would tend to look for, like buy the dip opportunities. These buy the dip opportunities can present themselves within the bullish Pima trigger zone, as I call it, and that trigger zone is in a very healthy bullish trend. It's between the 8-period pivot-based EMA, which is this yellow line, and the 21-period pivot-based EMA. And you'll notice that inside that average is about where you see price pull back, and then you see it rise to a new high. Then it pulls back, and it goes to a new high, and it pulls back, and it bounces, and it pulls back, and it bounces over and over again, time and time again. And again, you don't tend to see a market that extends in this manner for multiple months, almost perfectly going off of these zones. At some point, the personality of the market changes, but as I usually say, the personality will stay that way until proven otherwise. And we're currently in this personality of this market, which is a very bullish trending market with very clear pullbacks. These pullbacks tend to be 1 to 2 days, sometimes 3 days, and we've just recently received one of these 2-day pullbacks here to begin the month and to begin the quarter. The pivot high yesterday to the pivot low today provides this pullback right here. About 100-point pullback or so. You can see right here 33.5 to 35, so almost 100 points. We've seen similar pullbacks here, similar pullbacks there. This is a similar pullback. We had this one a little bit more extended, this one here to begin, this one here, and then to begin the new year there. And one thing you'll notice after every single one of those pullbacks is we come roaring back the very next day and into the next week, almost like clockwork. And again, this type of behavior won't last forever, but it is what it is until it isn't. And right now, it is what it is. And one of the things we were looking for in our trading room this morning was, after this 2-day pullback, could we close the day near the midpoint of the session? The midpoint is that yellow dot right there on all my charts. So you can see that yellow dot, this yellow dot. That is the midpoint of the day's range. It's basically the high plus low divided by 2. So it's the high, the low, divide that by 2, and you have that midpoint. Very important level in the charts. And what you'll notice here after some of these heavy sell-off days is that we've closed off those lows almost every single time. We haven't quite taken over the midpoint on any of those days, but we have closed off the lows and we have closed close to the mid almost every single time. This was probably the lowest we closed without a bounce. And the idea behind that is likely the market has been so bullish that short sellers or short traders there haven't really wanted to hold overnight on those selling days, instead choosing to cover shorts into the end of the session. That short covering tends to lead to an upward move into the close, and then the next day you're off and running again to the upside. And so we were looking for that behavior yet again today. We were looking for something like that to play out, something like this, or even back here. And we got that move late in the session. We got the short squeeze, or the short covering rally rather. We got the move to the upside. And that bodes really, really well for tomorrow's market. So tomorrow, Wednesday, April 3rd, we're looking for an up day. We're looking for an up day that takes us more precisely to today's high, and likely even into that 5,300 level. So that means from the current close here, you're looking at 38 points to the upside just to get to that point. But do we get a little bit of a pullback first? Do we get a pullback to 5,250 and then rally into 5,300? That would be a plus 50. At the moment, you'll notice down here that we're averaging about 41 points per day on a 10-day basis. We're averaging 42.5 on a 5-day basis, and the 5-day average is now increasing, especially after last week's holiday shortened trading and lower volatility price action. And so what we're looking for now is not only for a bounce back day tomorrow, but perhaps a rally that takes us higher to new highs over the next 5 to 7 days. And we'll do some of those measurements here in a moment so that you can get some clear targets. But the first thing to look for here is tomorrow, any pullback, the early pivot low, look higher about 50 points, and you're going to get yourself the likely upside target. So if we bounce off 5250, you're looking at 5300 as a good upside target for the day. Maybe we don't pull back much at all. Maybe it's only 5255, plus 50, you're looking at 5305, or maybe a little higher. But we're basically looking like something like this. Go take out the previous high. Go meet the previous high. This one fell a little shy. This one fell a little shy, but a lot of times you'll notice that this thing will come back to the previous high and likely surpass it. And if that plays out and we end the day bullish like this, the next day will likely be a continuation. It'll likely be a continuation. It could be a 2-day hold for a continuation move higher as this thing stretches for 5350. So ultimately it could be a 100-point move over the next couple of days at the very least. So just from a very short-term perspective, that's something that you can take into tomorrow's market for the ES. Tomorrow, likely an upside day. And the midpoint's going to be very, very important. If we can overcome that midpoint tomorrow, you're gunning for the previous session's high. The other thing to keep in mind here is from a swing perspective. So for those of you who are swing traders, this pivot low could be the new strong low. And this has been a different market here lately. We haven't been getting our customary strong wick reversals that we're used to looking for. Instead, we're getting these days that we're pointing at here. These ultimately become strong lows by how far price pushes away from those lows in the very next session and in the sessions that follow. So this strong low could become stronger tomorrow if price closes the session higher and moves away from that pivot low. If so, that low right there could be used to project higher over the next 5 to 7 days to a target closing in on 5,400. So let's do that math real quickly here. Down at the bottom, we have the PivotBoss Advanced ADR. This stands for Advanced Average Daily Range. It's an indicator that helps you calculate the daily ranges on average. Also helps you calculate multiple day ranges as well. So I like to quantify the outlier events. And one of the outliers we saw recently was this narrow range here, this multiple day narrow range. You can count it as 1, 2, 3, 4, 5, 6, 7 days. So you're taking the highest high over that 7 days, you're taking the lowest low over those 7 days, and you're using that for your measurement. And so what I'll do down here is change this measurement from a 1-day calculation to a 7-day, and it spits out a reading here for us. And that reading tells us that it was indeed compressed. And anytime we're below that red dot, that means you're significantly compressed. It's below 65% of average range being this gray line here. And you end up getting this magenta colored line there. And on the histogram, you see one right here as well. And typically speaking, you would see that compression lead to the next forthcoming expansion. And you see some compression here, not quite super compressed, but expansion. You see some compression here, expansion. You see some here, expansion, right? You see a theme here and there. Now these are significantly compressed. That's why they're colored magenta. Helps bring that opportunity to your attention. And what we're looking for now is the next forthcoming expansion. And directionally speaking, likely to the upside. Likely to the upside. The last time we had this reading here, it was based off of these 7 days. 1, 2, 3, 4, 5, 6, 7. And it was after strength. And you see this day right here break that range to the downside. And then from there, after that breakdown, we check mark rallied higher, like a check. You see, it's like a check mark. It drops first, and then it rallies second here. And that's exactly what we were looking for in this scenario. We had been talking about it since last week. We talked about it again yesterday, and we were hoping that we could see a violation, a push down through the previous week's low, and we were hoping for a push downward that would then be met with some responsive buyers. And if so, that could be the initial portion of our check mark, and then we could rally higher. So this is basically the pattern we're looking for coming up ahead. Now, if we're able to rally like that tomorrow, it would be tremendous. It would be significant if we could. We'll see. But we are looking for this thing to push through at least to the previous session's high and through it somewhat. So higher highs and higher lows tomorrow with a higher finishing close. And if we take this low, the expected forecasted expansion amount is about 153.5 points. Why that level? Because when you go from compression, you're looking for the upside red dot. The upside red dot is 125% of average. So when you go compressed here, you're looking to go get the red dot. That would turn this blue. Here, you're looking for it to go grab this red dot, turn it blue. Here, up here, turn it blue, etc. And so right now, that red dot is 153.5 points. So from the low, of 100, rather 5,235, what you're looking for again is for this market to go 153 points off that low. We can do precise math there and just say, okay, 52.35 plus the 153 half, and you're looking at 53.88 half. 53.88 half. That would be an exact number. What I usually do is say there's a zone here, and I want to see how likely we are to get that number, right? How likely is it that we can go get that number over the next 5 to 7 days? And you'll look back in history in here and notice that we've gotten it here, we've gotten it there, we've gotten it here, we've gotten it there, we've gotten it there. So we've gotten it 5 times already this year. We should easily be able to go get that amount this time as well. And a lot of times we actually see this thing go even higher to about 180. So I would say in the trading room, I would tend to say, okay, we have a shot to go between 150 and 180 points over the next 5 to 7 days. This is a 7-day reading, and today is day 1 of that reading. So we got 6 more days, but give or take a few days. It's not a perfect science all the time, but give or take a few days here from this low, we should be looking at that 53.88 number, and really it takes us very, very close to the 5400 level. So I would say maybe there's 165 points coming up. So you can bisect it between 150 and 180. Let's call it 165. That would get you right to 5400. And so 5400 has been our upside target. That's been our upside target for a while, based off of the large 400-point distributions that we have seen in this market. These distributions are very clear. What we've seen here, and I deleted one of these levels, but 4,200 being a very important level, 3,800 being another level. That's 400-point spread. Then you look 400 points up, and that's 4,600. Then you look 400 points up, that's 5,000. And then you look 400 points up, and you're looking at 5,400 here as your next level. And so this market has been moving in 400-point market structure distributions for the most part. And the last time that we saw this trap right here below 4,200 and we recovered, the idea was that we were likely rallying back to 46 and through it to the next level up, which would be 5,000. Did the same thing back here when we were looking at 38. We likely come back to 42 and make our move higher to 4,600 as well. And then once you make that, a couple of distributions moves, you can tend to come back within the range, build out some market structure, and then make the transition to the next one. So 5,400, the next one up. So over the course of the next, again, 5 to 7 days, maybe 7 to 9 days, something like this, we should be looking at a target into 5,400. That's the bull scenario here. And that scenario really, again, revolves around tomorrow. Can tomorrow finish bullish? Can it finish higher through the midpoint, through the previous week's low? Can we finish at or beyond 5,300 and give us that good first bullish day? If so, we might be squeezing to new highs right away for a 5,350 move and then continue to 5,400 very shortly thereafter. So that's the idea from a swing basis. From a one-day basis tomorrow, looking for a bullish move here. And once we reach 5,400, what happens next? And that's going to be a big question now, because 5,400, again, big time market structure level. We've already run through a couple of these things from 48 to 5. Rather 46 to 5, and then right here, let's grab this tool again. Here's 46 straight to 5,000, and we never pulled back and retraded in here much at all. Instead, we just went straight through it and are now approaching the next one. So when you go 2 major distributions like this, there is a tendency to fall back. So if we come up into 5,400 and see major rejection at some point, we may be looking at a pullback to 5,000 as it trades in this market structure for a little while before the next major move. Beyond 5,400, you guessed it, 58 would be the next 400-point distribution up above. You're not likely to just to push through 5,400 and just go straight up. Only in the most significant bull markets or extreme markets, but even some of those tend to hold and retrade. So it wouldn't be surprising if once we hit 54, there's some sort of pullback that may happen to retrade through some of this as it builds energy for the next move. But just from a near-term perspective, tomorrow, looking for an up day, and over the next 5 to 7 days or maybe a little more, looking for a push into 5,400 and see how that plays out. So that's the ES here. As we head into tomorrow's market, super bullish movement we've seen there. If we move on to, say, the NQ, very similar price action. Very similar price action. Not quite the same type of trade. This one tends to trade in a bit choppier fashion. But look at the reversal from the lows today. Look at the close. It's very close to the midpoint. Again, it's very similar to this day here. Very similar to that day there. Very similar to this day here. And you can go on a lot of these days where you sold off, but by the end of the day, you were looking a bit more bullish. This one less so. And there's a couple of ways you can go from here. Sometimes you get a failed new low and you're looking for a big time push off the failed new low. Those are one of my favorites. It's that day right there where you come down, take out the low, you see a trap, and now you're reversing full steam ahead to the upside. But oftentimes when you're this far away from the low, you're not going to get that low opportunity. Instead, you're just going to kind of maybe drill higher right away. This one just gets going to the upside, and you're looking for a push to the previous high. You're looking for a push to the previous high. In the best case scenario, you can finish through the high with some juice, and that would open up a path to more strength ahead. Now again, if you look at this narrow range here, 1, 2, 3, 4, 5, 6, 7 days, it's quantified down here, and you're looking at 700 points of range here. That's 712 points of range. You can bring it back, and you've gotten it here, you've gotten it there, you've gotten it here, got it there, got it there. You even got it a couple of times in here. So it's a very doable amount. Very doable amount to go 700 points. And there's even times where this thing can go much more than that. You know, you can see these topped 800 here. This one topped 1,000. So do the math. 18,200 plus 900 takes you to 18,900. 18,200 plus 700 rather takes you to the 18,900 level. So 18,200 plus this 700 point dot, and you're looking right at this level right there. And coincidentally, or maybe not, this is also the R25 for the month. So you're taking the previous month's high, the previous month's low. That's 25% of that range projected higher from the high. And that's a pretty solid target there. So from this low, can we go grab 18,900 over the next, again, 5 to 7 days? In all likelihood, yes, likely so. And again, high range day today. Today's range was 152% of average. It was a range of over 300 points for today. Tomorrow could be about the same, 250 to 300 points of range. So from the low, on a swing basis, we're looking at 18,900. Now for tomorrow's market, we can bring this back to a one-day range right here. And again, look at this range that we're looking at right now. The range was a high range day today. We have a rising 5 period against the 10, which means volatility is increasing and price range is increasing. You have 300 points right here, and 300 points is pretty easy when this market is humming. And sometimes it can get 400 or 400 plus. So between 300 and 400 is a very good range day. All of these days right here were below 200, but that was as we were coming into a holiday week. and so volatility dropped off, and now volatility is back. So tomorrow, can we get 250 points to 300, right? 250 to 300 would be tomorrow's target range, just from a one-day perspective. Find the morning low, look up about 300 points. That's the idea. Find the morning low, look up 250 to 300 points, and that's going to be a pretty good doable target from a one-day perspective. Sometimes after a high range day, you can sit there and have a low range nothing day. But, this market is starting active for Q2 and for the beginning of a month. It's just now coming out of a very narrow 7-day range. So I think the volatility's back. And if we compare this to back here, this was another narrow 7-day range. 1, 2, 3, 4, 5, 6, 7. Look what it did first. It broke down first, and then it snapped back the very next day and rallied for the next 7 to 9 days to get a strong pivot high. That's what we're looking for here. We're looking for 18,900 up ahead off this 18.2 low. And for tomorrow's market, again, we're just looking for 250 to 300 points of range to the upside. That'd be solid. Doesn't have to be as big as today. Just give me 250 points, and we're locked and loaded on that. And one of the ways that you can play this, again, is something like I did here late in the day today. Here's the QQQ, and I'm forgetting which one I did now. I might have done the 443 out of the money call there, and bought it before the end of the day, looking for price to rally to and through that level. And if you're very confident on the directional conviction and the volatility, you can play with very low days to expiration. It's not always the safest bet, but oftentimes that's a way that can be played. I went 0 days or 1 day to expiration, which will be tomorrow expiring, looking for this thing to go push through those 443s and rally. And that's how I'm playing it there. You can also play it into the end of the week or add days here for a little bit safer approach. There's also the in the money approach, where if this is the strong low and you're looking for this thing to rally over the next 7 to 9 days or however many days, you can buy the in the money call at the pivot low, which would be the 438s, and let this thing go run over the next 2 weeks, right? And that thing likely finds a new high, and you're working with a new high that takes you somewhere in the 455 zone or so. So looking for this thing to go run over the next day and over the next week and a half up ahead. Now the YM looking very similar as well. Oh, sorry, I just missed this question here. Any type of gap would you consider an early entry? So that's a great question there. Oftentimes, I know the futures won't always gap, when unless you're going from Friday to Sunday night. But you can certainly see a gap with the ETF associated with these. A lot of times what I would say is if this thing is trading above the midpoint by the time the RTH Open comes around, that's a very good bullish indication. And so if we're trading above the mid by tomorrow, the first pullback is likely a buy and you run. And it's an open move here to the previous high. That's the early idea. So that type of gap could be in play. Again, the futures may not gap here. Maybe they could at the after hours reopen. They certainly could. But even if the futures run here to begin after hours, and by the time RTH Open comes around, we're trading here, ETF wise, they'll have a bullish gap. And in that case, you're looking for a retest entry back down for a check mark continuation up. That's going to be and that would be ideal. That's going to be ideal if by the RTH Open we're trading above that mid. That's going to be very healthy and what you'd like to see. Now, if you're looking here at the YM, you'll notice this one's had a bit more volatility than the ES or the NQ recently. We've had very narrow 7-day ranges in those other markets, and this is not a narrow 7-day range. It's got tons of volatility back and forth, high range days. This one could easily trade over 400 points tomorrow if it really wanted to get going to the upside. 400 points to 500 points would be about a good normal high range day. And if you want a significantly extended day, then you're looking for 480, which is kind of tough at the moment based off of the increased volatility we've seen. It could probably do it, but 400 points would be a very good day. 400 points this way, you can see how many times 400 is achieved here recently. A very good high quality target, somewhere between 400 and 500 points. Today was 437 points. 437 points, and that right there is again a really solid day. Can we get 400 points tomorrow? If we're looking at 400 points here, what happens if we pull back a little bit? Maybe we pull back and 450 is the low tomorrow. If 450 is the low, add 400 points and you're looking at 850 as a good strong target. And again, what we're doing here is we're looking at this pullback, this 2-day pullback, and looking how it looks kind of like this one, and looks like this one, and looks kind of like that, and looks like this one day, and a little pullback here. And each and every time we've seen a very forceful rally that has ensued. Sometimes a little smaller than others, but the goal is if we can get an update tomorrow and finish higher than it opened, ideally finishes on highs, you're likely going to extend that into day 2 and even longer into the next several days. So that's the idea with this one. One thing about this one is we do have a very good key range here that's in play. Key ranges will be a very good focus of what we're going to do with some of these stocks here up ahead. But basically a key range would be based off of an impulse move of some sort where you find a strong pivot edge, like a strong low here. You rally till you find a strong high, and then it pulls back fairly expediently to the midpoint of that range, and that gives you a key range with actionable levels. The two major targets would be the 50% extension and the 100% extension, and right now the 50% already hit at 40,300. Now we're looking for this thing to go tackle the 40,900 level, and it's just off the 41K level as well. So that could be a very nice continuation up ahead. We don't really have a narrow range compression to help us forecast that with, like we do with the NQ and the ES, but we certainly have a key range to help us project that upside target. So that would be the next target to go reach, 40,918. This one not the strongest low compared to the others, but again, we just haven't been working with sharp rejection reversals in this current market. So for the Dow here tomorrow, looking for this thing to push through the mid. If it can recover the previous week's lows at 650 here, you're really looking strong for a recovery that can take us higher. And again, 400 points tomorrow will be very, very solid. Very, very solid. Yeah, so really good question here, Mike. This is a good question because this is something we have to deal with. And the question here revolves around the 2-day value relationships. And so, for example, if you look at the last 2 days, here's the midpoint, and here's the midpoint here. And you have a lower value relationship, and then price closes below the midpoint, which means you have a 2-day lower value relationship with a bearish confirming bias. And normally, if you have a lower value relationship, you're looking to sell a retest into the pivot range for an inverted checkmark move down. In this case, we're banking on the potential for that relationship to fail. And if you look back, this is a lower value with a close here, and it fails the next day. When you look at the lower value relationship here and the closes here, it fails the next day. So yeah, and for the purposes of the recording and for others to see the question here, do these larger pattern recognitions overrule the 2-day value relationships? I noticed the ES will have a lower floor pivot tomorrow, but you're suggesting that the upwards channel will continue regardless. That is, yes, the case. So you have a larger trending market against the shorter term pullback, the shorter term counter trend move. The shorter term counter trend move is just that. It's a counter trend move, and so you're betting that that relationship will fail the next day. So that is exactly right. And that's why I'm pointing to this midpoint as being the most important pivot, because if it pushes through there tomorrow, you're now failing. That relationship is failing, and now the high will be the target. So it's if then else. If then else statement. If it pushes through the mid, then you're working toward the high. If not, then you're going to get a lower low again. Now, I would say from a lower value relationship on a 2-day basis, like you're mentioning, the best ones, or even higher value, the best ones are where you have a very good confirmed close. When you close too close to the middle, I wouldn't call that confirmed enough, and that is about the time where that relationship can fail. Whereas over here you have a higher value relationship, but the close is way up here, which means there's a shot to still go get that new high. Maybe not the best example there, but that's the case. So yes, some nuance there, but those 2-day value relationships are exactly what we look for time and again. For example, yesterday we had a lower value here with a decent close, and we were looking for the check mark move down to new lows for today. But tomorrow we're kind of switching it up and going against that bias. Great question. Thank you for that. RTY has had some wild action here lately. Very, very wild price action, increased volatility. We're seeing very deep pullbacks within its channeling behavior. And it just had a massive 2-day pullback. Massive. Yesterday was an outside day down with a strong high, and then we drop into this low. The idea here for tomorrow is, can we go push through this midpoint and bounce back up? And it's very similar to any number of days here that we've had here in the past, where it's had a huge day down only for this market to rally back up. And so for this one, maybe the 2-day range, the 2-day move is so much that tomorrow is not the biggest day. It could be that we have a day or two where you're kind of hanging in here, but overall we're still working higher again within that channeling behavior. So looking for price to take out 2100, looking for this thing to push through that level and hopefully close beyond that 2100 level. This is another one here where just before the close I went ahead and just took an out of the money flyer here at 206, and ideally this market can go attack 206 and finish beyond it, or at least push beyond it early enough in the day, and that would be a win in big fashion. And again, that could trigger a moment here where we're going to go fill the gap and maybe work through to new highs as well. So those are some of the equity markets here for the next session in the next week and a half of trading. Now, if we look at some of these from a longer term perspective, again, the pattern is what the pattern is. We're just trending up. I will say that when you've had this much elongation in a trend, that is an outlier event. That is a tremendous move from pivot low to current pivot high, that you're not likely going to get the heavy pullback right away. Instead, what tends to happen is you churn out at these highs, kind of like this, and you may see abnormal compression. And we've already seen a little bit of that in the ES, or rather in the NQ and the YM. You can see some compression here. You saw some compression here. It's unless proven otherwise, right? Unless it can prove that it can stitch together 3 heavy days, 4 heavy days, sell off, the big bad ugly here may not arise. Instead, it may churn out a bit here and at some point break it later. But the level to watch here is the previous month's midpoint, which it's sitting right on top of here. A failure at the previous month's mid will open up the previous month's low. And as of right now, we're right at it. Maybe tomorrow's a failed new low and bounce back up, but we're still trending up until proven otherwise. I wanted to move on here to crude oil. Crude oil has experienced a tremendous few days. We've already done some ADR compression work for the ES and the NQ to project the 7 to 9 day moves higher. 1, 2, 3, 4, 5, 6, 7, 8, 9 days here. And we just got the breakout a couple of days back. So when we look at this one here, it's forecasting about 6 points higher. And the way I do the forecasting, there's multiple ways. For example, this was a good failed new low that triggered the up move, so we can use based off of that low. But we didn't break out on that day. We broke out on this day, which was basically last Thursday before the holiday extended weekend. So from that pivot low on the breakout day, I will then forecast higher the expected amount, which is about $6. $6 off that low puts you at about 87.50. 87.50 is about what we're looking at right there. So here's the low on that day, 81.52. Add to it $6, and you're getting the 87.52 target. So we're still looking for that as an upside target up ahead. This market has been trending higher pretty cleanly overall, but it's been very slow about it. It's had some real frustrating sideways moves, up a step, down a step, up a step, down a step. It's had a couple of good moves that we've worked off of here, but this one is the most promising. It broke through the $80 level here and held above 80 and now is continuing higher. And according to our key range back here, for those of you playing at home with the key ranges, this is the impulse move here. You have that strong high. Notice how strong of a high it is, and then it sells off, sells off, sells off, gets a little blip, and then finds this strong low, and then it works back to this midpoint. So you have that key range high, you have this key range low, and you have that midpoint. And it was such a wide range. When you have a super wide impulse move, it's designed to keep prices within those two extremes. It's designed to create market structure and facilitate trade between those major extremes. And then what you'll tend to see at times is what I call a neutral key range, where you trade in the middle 50% for an extended amount of time, and eventually it powers a big time breakout move. Now this one has been a little slow about it, as we've mentioned, but it's made its way higher. It's made its way higher. One thing I also find quite bullish is how the market has responded to the previous year's close price. That blue dotted line is the previous year's close, and you can see how it's been bid throughout the first 5 weeks of the year, and now we're working way up here. So from the key range pivot high here, which is 79.60, we have now nearly approached, but I'll say for all intents and purposes, we've hit this 100% level, which is basically the 50% extension. So if you take this distance from here to here and you project 50% of that, that's this level. You project 100% of that, and you get this level here. That's 91.5. So ultimately, based on the key range here, we're working toward 91.5 as the major upside target for crude oil. And we're looking for that by the beginning of the summer. I would call it June. The first week of June is what I've been mentioning this entire time. By the first week of June, we're likely at 91.5 at some point. Now, we may get there faster than that, but that's the goal, is that we have bullish directional conviction that will take us higher into June and July during that summer driving season, and we're likely going to reach that target. Key range measurements are incredible. The key ranges are fantastic. And this one's had its action within it. It's now trading outside of it. And we've had a pretty solid 4-day move here, but any pullback could still be an opportunity to buy this thing and continue to extend it higher. So in the near term, out of this 9-day range, we're looking for price to hit 87.5. And then in the medium term, we're looking for this thing to continue higher toward 91.5 up above. Also, I've changed the market structure levels for this market. Initially, we had it on the 4s, so 64, 74, 84, and 94 were our big market structure levels, and they traded really well off of those last year. Go back last year and you'll be amazed. This year, it looks like they're off the zeros. So you have 70, 80, and 90 as the major levels, and you can see how they've traded off of them this year. Here's the break at 80, which I call transition day. To break through the transition day would suggest you continue toward 90, especially if you can rally to the middle of that range, and it did by getting to 85s. So theoretically speaking, this thing can come as deep as 80 and still be a go to 90. Once we fail at 80, that's what can open up a move back towards 75 and 70 down below, but we're on our way up right now. So 90 to 91.5, the medium-term targets up above for crude oil, and any pullback here in the near term could still be a short-term continuation toward 87.5. Now, this has been very strong here over the last couple of days. Again, the personality of this market has not been very linear. It's been go up a few paces, pull back, or go up and pull back. So this is up a few paces here. I wonder if we have a pullback day that comes in the meantime. So it may not be a super linear move right now. But if we do get that pullback, it's still an opportunity to buy in on the dip for a continuation up toward 87.5 and 91.5 up above. Now we have a question here regarding Nat Gas and UNG by Dwayne here, so we'll take a look at Nat Gas right now. Nat Gas is one that we tend to look to at this time of year for a seasonal bullish play. Let me just bring up the seasonal chart here so that we can kind of be on the same page regarding this. And right here you'll see this is seasonality. If you're not used to seeing seasonality, it's basically average price over the last X amount of years. So what does price do over the last 5 years, and it gives you an average over the course of the year. This cyan bluish line here, cyan line, is the current price action for this year. So this is a 5-year look back. I tend to like to look to 5-year and 10-year increments. I don't usually go all the way back to 20 years, but sometimes I do. The last 5 to 10 years is good enough usually for a good seasonal average. And one thing we always look for here are a couple of seasonal tendencies in Nat Gas, one of which is a pivot low at the middle of February, followed by a rally that can take you into the first week of June. So here's June right there, and a rally. You then tend to see a rally that begins at around the 4th of July into the beginning of September. And then somewhere here and about the beginning of November, you tend to see a sell-off into the end of the year. Those are three major seasonal tendencies for this market. Now, seasonality isn't perfect. It's just an average of what has already happened. But when you have a commodity like nat gas or like a crude oil or even certain stocks, you can tend to see very clear patterns of seasonality that just play out over time because they're just supply and demand deals there that just kind of tend to work out over time. Now, this strong low tends to happen early, mid-February, and what I've noticed before again is kind of a stunted low or kind of a blockish bottom where it kind of builds that energy, and then it starts to work its way up into the first week of June. And we're kind of seeing that here. The first strong low we saw was on the news that Chesapeake was going to cut production of nat gas, and price put in a low right away and bounced. And then we've had a little bit of pullback here and there over time, but it's been leading to that kind of higher low, stunted kind of rejection reversal. And we're getting into the part of the chart now where the rally is likely about to ensue. You get into April and things start to really work nicely. Here's April 1st. You bring it up as a clear line this way, and you can see that's about the time where you start to make your move, and we've already made a little bit of a move right now. So the lows could be in already. It's just how long will this thing take before it makes its move and actually sees that bullish seasonality materialize. It could be, sometimes it takes a little longer than expected, and sometimes you see tremendous strength. So that's the seasonal pattern, and by April you tend to start moving quite nicely. Now, if we go back to our normal view here and look at some of the charts, right here, this is the view we're seeing right now, and lo and behold, look at the reaction here on the first trading day of April. Very nice bullish day. It's also a green bar, and for those of you in PivotBoss Masters, the green bar is something that you have. It is the buy G squats there, and that type of bar is very, very bullish. It can tend to suggest that the train is leaving the station and we're about to make our move. So that's really solid. Today was a pullback and hold bar, and again, something you'd like to see. It really looks like this thing is about to launch now. From a pivot range perspective, it also looks like it's about to launch. A monthly pivot range perspective, this month's pivot range is here, here, and here. It's very narrow. So you have a super narrow pivot range, and when you look to the left of the chart here, that narrow pivot range is a result of compression and closing the month near the midpoint of the month. So the high is here, the low is here, and it closed near the middle of that month. So you had compression and a close near the mid. That type of behavior right there can tend to lead to expansion and elongation. Expansion and elongation. So when you have a good compression of pivot range here, and you see visually that this market is compressed, that's about the time where you start to make your move. And to have a first day react to the pivot range in a bullish manner, you see the second day hold on a retest. The idea would be then that you're going to go test the edge, which is the previous month's high. So it looks like we're about to go test $2. Now, back here, on the day we hit $2 from below, I mentioned that was probably marking the high for a potential breakout down the road. So it made its move, it hit $2, $2 is this major CLVN, composite low volume node, And it's the level to overcome if this thing's going to rally. It needs to jump through $2, and once it can get through $2, it opens the door to value. See VPOC here at 259. And if you can get to value from below value, then you're likely going to rotate to the top of value, and that's at 327. So that's the idea. Can we get to 320 to 340 by June, maybe? Maybe by September, right? September is the high, tends to be the high. So we're looking for that to play out. So from a near-term perspective, this narrow pivot range looks quite good. The reaction we've seen so far to begin the month is right in line with what we would see in April. And that right there is really, really good for those of you looking to play that seasonal play for an upside move. The next level to overcome would be that $2 level. If it can push through that level, things really open up to the upside for a nice continuation. So it could be really, really solid. $2 is the next level to go get. And, you know, we can look at this from a longer term perspective as well. But really, this level is the one to overcome. It was prior support lows here. It dropped through that level. Then it came back, made it resistance. At some point, when it gets through $2, it's going to open up the upper portion of this range. And the current response to begin the month and begin the quarter looks quite good. Looks quite good. Very, very solid. Now, from a UNG perspective, UNG is still kind of hanging out near these lows. It hasn't quite seen the juice that that Nat Gas has seen from a futures perspective. But there is a really nice lower low here that's come into play. That lower low, not the strongest again by means of a pivot low. But anytime you get a lower low and you can overcome the prior pivot low, that's pretty solid. So that low right there, you see it went below it, then it recovered it and is bouncing. That's pretty solid. That's kind of what you want to see here for a shot at returning to the prior pivot high, which would be that high right there, and that's kind of similar to that $2 level we just mentioned in the futures. Now this one doesn't have the narrow pivot range that the futures has, but it does have this midpoint here to go attack, and if it can push through that mid, it starts to open up the upper portion here. 18 will be a very good level to go test. It's the previous high, and it's already making a move away from the previous month's low and close. So it's just started with a gap up and holding. That would be quite bullish for a test at the mid and likely a push into this high here with a shot to start working your way up. And one of the things we mentioned in the trading room over the last month to 6 weeks is $14 to 28 could really be in play by the time September rolls around. It would not be surprising to see a 28 print somewhere in there. And I would say anywhere between 27 and 29 could be the target zone by September. You can see how big that HVN is right there. That's where everyone's holding. This is a return to those prices right here. Big time gap fill as well up there. That would be the longer term play, would be into September. How far do we get toward that target? But it all starts with overcoming 18, and that right there is the doorway that opens it up to the upside. So you want to see it get through the previous month's mid, and that'll open up a previous month's high test up ahead. So those are a few of the futures there. I did want to jump over real quickly to Bitcoin and ETH. Bitcoin has had a tremendous move. It's hit all of our targets to begin the year and then some. Really, to end last year, one of the things we mentioned was if it can push through 30K, it opens up the middle of the range back toward about 47.5, and then it opens up the next half of the range into 70K. somewhere in there, right? Really, it was about 50K or something like that, but that was kind of the zone. If it can get through 30 again, you're working your way up toward 50. If it can get through 50, you're working your way towards 70. And it did it much faster than I would have anticipated, and I was quite bullish on it anyway, especially with the introduction of the forthcoming spot Bitcoin ETF. And then they started trading the spot ETF here, which was right when it hit 50K. It pulled back and exploded. Incredible movement, and it was all based off this previous market structure. Now, for those of you that were in our monthly outlook last year in January, we mentioned 18K was the big level there. If it can push through 18,000, you have a shot to rally to 31.7 by the first half of the year, and it got there much faster. It hit that level. Let's see, the high was 31.2 real fast, and it was basically a box reversal and a continuation. But 30,000 was the big level to get through. Eventually, when it broke through, it opened up a tremendous amount of upside. This rally was much bigger than we could have forecasted. I know we were looking at this small range here that was forecasting 8 to 10,000 points, and then it just did way more than that. So it's incredible here how bullish this market is. Now at the moment, it's had a bit of a bearish day today. And I think that that bearish day actually sets up very, very nicely for strength tomorrow. And if Bitcoin has a bullish day tomorrow, we could be looking at tech having a good day, and everything kind of bounces back on a strong Bitcoin right now. The correlation is definitely there. Now, the one thing I do want to point out to you all is the key range. You can see it right here. That impulse move. So it got a strong high at 74,415. It dropped until it got to 61,020. And then look how strong that bounce was right back to the midpoint, which is 67,717. That awesome impulse move right there is exactly what we needed to fuel the next rally ahead. Markets just can't sustain this type of exponential movement. It's quite hard to sustain that. And the worst thing that can happen is to have exponential movement sometimes, because then it leads to a corresponding drop all the way back down. But the best thing you can do after exponential movement is to set a key range so that then it can build out at those highs and can define some market structure, facilitate some trade, and build some energy. Because now that range that's developed here can help fuel the next move up. Hey, Coco the trading dog agrees. The next move up is 87,810. 87,810 is the next target up above, and that is based off the key range. Let's just call it 88K. So from this move here, that impulse move, it's forecasting 88,000 as the next medium-term move. Now, I know we can go bananas and forecast the highest prices you want and say, 100K, especially with the Bitcoin halving that's likely to take place here at the end of the month or third week of the month. That could play out. I like to go little by little and based off market structure. I don't know if it'll hit 100K right away or what, but I do know that 88,000 is very doable. And the 88,000 here could be played from even more of a pullback low. So if you have this strong pivot low here, and for those of you that know the key range analysis, the way I teach it there, in a bullish market and when you're expecting a bullish continuation to the 100% upside target, I always say the best entry and the best entry zone is below the key range low. So 61,020 is the key range low. That 25% extension right here is 57,671. That can oftentimes be the best entry as an ambush alone. And then the spacing between the key range low and that 25 right here is what I call the trap reversal zone right there, where you look to trap bearish participants and then reverse it back up to the top of the key range and ideally through the top. And in that case, you're playing for a full 200% of key range, which is just tremendous. I'm not sure we get there, but I think it has a shot. We do have a shot to get down there at some point and trap and go. This market is volatile enough where day over day we're seeing enough volatility that can push price back and forth. I would say there's still quite a bit of adoption into the spot ETFs. They're still clearly they're the most successful ETFs ever at this stage of trading, which again, the first day of their trading was on that day right there, and that was what, the 11th. And so you had a little bit of the selling of the futures to get into the spot, and you've seen this. There's still quite a bit more upside that could be ahead. But having said that, that doesn't mean we can't pull back a bit. So if we are fortunate to get a pullback that takes us to the mid 57s, call it 57,500 to 55K, that might be just a great longer term entry for not only a move to 88K, but maybe, if you're patient, toward 100K up above. That could be tremendous. So you always like to see a great key range develop like this. It helps provide great entry locations and also directional targets. I like targets using these key range on both sides of the range. So you can see down here, this would be your 100% downside target, and that's about 47,500. That's very doable as well. I mean, we auctioned up through this area, then auctioned up through this area. Now we're trading in this range. It could easily make a move down to here. So anything can happen in these markets. We've seen Bitcoin rally from low thousands up to 20,000 and then drop back to 3,000, then rally up to 69K, then drop back to 15K. Anything can happen, so just keep that in mind. But from a directional target perspective, 88K, the next level up out of Bitcoin, and any pullback into here, I would not be sweating that. Instead, that's an add back, or that's an opportunity to be in for an eventual push to the upside. Now, good question here by Dwayne. How do you think the halving event will impact miners? Do you think it is too predictable and best to avoid miners until after the halving? You know, I've been wondering that myself. When you're looking at some of the miners, and we'll look at a few here, you know, there's some wild action. There's a lot of wild action. If you look at something like Marathon Digital, for example, you know, way up to the top, then way back to the bottom of its range. It looks like they've already been discounted quite a bit, so there might have already been some pessimism heading into the halving event. The larger ones may eat the smaller ones. It just looks like already there's been kind of a major volatility and a risk-off approach and a profit-taking approach already happening in the miners, which is incredible. The amount of volatility we've seen and a lot of swings on the price range that we've seen. But you know, something that we'll continue to look at here. But it looks like there's already risk off, and we'll look at a couple of them here as well. So we'll get to those here shortly. A quick look at ETH and its key range. ETH is Ethereum or Ether futures here. A super large key range from this high down to this low. It is about a 1,000 point key range, which means 1,000 points to the upside from the edge, and it points to 5,200. 5,200 as the upside target. 5,200. So if you look over here, 5,200 is right there, and that could easily be an upside target that is seen down the road, especially if there is some sort of headway on the spot ETH ETF, kind of like Bitcoin. I know there's been some headwinds on that, but that could provide a very good target down the road. I would say this key range right here provides a tremendous opportunity for price to drop below the key range low and trap and reverse. And for anybody that's not in Ether futures or Ethereum, not the futures but the actual coin, there could be a tremendous opportunity to be in, and I would say 2600 is that line. If this thing is able to drop into 2600, 2600 times 2 takes you to 5200. You would double at that point, and you could take out your initial investment and trade the rest with market house money. And so 2600 to 5200 could be ahead. It wouldn't surprise me if we made one last major ditch effort here to drop hard. But even if we don't get that low, 2900 could be a great entry. 28 to 2900 could be a great entry for a rotation to the upside. This one is still looking up. And if you look at the last 5-year volume profile here, we haven't gotten to the all-time highs. Whereas Bitcoin took out its all-time highs, this one is yet to go get it. It's likely to go grab those all-time highs at some point. And so at the very least 5,000 could be ahead. But based off this key range, you have 5,200 as a target. I would say you pull back this thing into 26 if you're patient. If you don't have a position, if you don't have a dog in the fight yet, or if you want to add back to a position, 2,600 could be a very good level to work off of. That could double your money there, and then you take out half that cash there for your original investment to be safe, and you can let the rest go to whatever it's going to go to over the next few years. It could be quite significant. But again, this is the key range to watch. Prices below that key range are as low as 2,800. 2,800 up to 5 or 52 could be very doable here down the road. So just wanted to put that out there for anyone looking at engaging ETH. Now moving on to some stocks here. I know we have talked a lot about these markets in big time depth. We've talked about key ranges a lot. Some of the markets that we looked at last quarter and at the beginning of January turned out tremendous. For example, CVNA was a double candidate that we talked about, where it had a massive rounded bottom that was developing, and based off of where it closed here, an entry at 45, or even if it can get to 40, an entry at 45 would likely double by the end of the quarter in the best case scenario. And 45 went right to 90 and doubled. Now keep in mind, when you get something like this, the idea tends to be, if you can get that double, you can do whatever you like, but if you get the double and you're fortunate enough to get that double, sell half the position. So say you bought 100 shares at 45 and then price goes to 90, you can sell half, and now 50 shares here is kind of your original investment, and now you have 50 shares to hold risk-free. Even if it goes to 0, you've lost $0. But if it goes to 100, 200, 500, it's all free money. That's one way to go. And Jen says here she only took out a quarter. So good job. Good job sticking in there and letting it play out, because 90 wasn't our upside target, our farthest upside target. If you know, for this one, we were looking at price making a move to 160 over the course of the year. By Q1 of 25, we might be staring at 160 in the face. So that would have been a 45 entry to ultimately 160. And That's where I'm really looking for price to go to based off of the market structure we've seen. Now it's got to get through 100 at some point, but to be able to take something off the table, take some profits, and then allow the thing to work out, I always think that helps to relieve your mental capital as well. So being able to take profits along the way, this is one of the ones we talked about to begin the year, and it did quite well. Another one that did quite well was, Crocs. Man, what a move out of Crocs as the market seems to reopen here, so the data is going a little slow. This one was a key range analysis as well. That's the key range high, key range low, key range midpoint. And when we got that key range, again, I mentioned that if it gets down here, it could be the best entry. But, you never know where it's going to go. But the idea was that by the end of the quarter, we might be looking at 136 as the upside target. And it got 136 by the end of the quarter. And again, when we were looking at this market, it was sitting at about $100 or so. So again, choose your entry, but the target right here was reached in that one. Very good move. Another one was AAP. Advanced Auto was another one of those long-term ones with a great rounded bottom. And we noted that if it can get through 70 to begin the quarter, you start working your way toward 90. Once you get through 90, you open up a move that can take you up toward about the 110 to 112 zone and fill the gap. So you're looking at about 112 to go fill this gap. And again, when we were looking at this one initially, it was $60. So I said maybe 60 can take you to 120 at some point. But it all starts with a push through 70. It eventually got through 70 and opened up the upside. Right now trading 84s. That was a great little move there. And there's plenty of others. Plenty of others. Man, SWAV, I didn't talk about this one enough. I should have. But this was based off of this day right here. Again, this is a PivotBoss Masters tool. And it's a massive day there. It's printed green as a buy G squat. And I mentioned that the way that it broke through suggested that we were about to make a move. We had these rounded bottom quality here, and we were likely going to try and rally to the top of the larger trading range. And it got there. Man, again, it's impressive how they got there so quick. That's what's impressive. We're down here talking about this thing trading up to this 315 target or so, and it was trading at about 215. So it made 100 points there by the end of the quarter and then some. Again, another great move. So hopefully we can find a couple of more opportunities like that here this time around. One of the ones I wanted to talk about here today, again, a lot of these are based off key range concepts, and we'll also look at some other ones here. Let's look at, there's several of them here. Let's look at NVIDIA for a second. I know NVIDIA is already super high priced, super gone. We talked about this one last quarter as well. And after it had rallied already through the 500, we were pointing at 600 or more. And it ended up rallying to 974. Now, kind of like Bitcoin, it had this tremendous run up, and then it had this impulse move down and got the mid. So what I wanted to do was talk about the key range here and what could still be ahead. From that key range, it has helped for price to build a range and go sideways and just kind of build out some market structure there with an upward bias. You're looking for this one to make a move to 1100. 1100 is the target up above based off of this key range. It could still make a move to 1100. And I know things look overextended right now, but until proven otherwise, this thing continues to just move higher. Now, how much pullback do we get first? If you can get 800, if this thing could pull back to 800 below this key range, there could be a trap from 800 that takes you to 1100, that'd be a 300-point move on 1100. That'd be quite a percentage move still yet to get. So that's a key range idea that could be in play. If we end up seeing some sort of massive sell-off here in the broader market, then these key ranges right here will be looking to play to the 100% downside target, which would be 700 in this case. 700 as the 100% target would be that target to go find. But right now, everything is still kind of focused to the upside until proven otherwise. Another one here we'll take a look at. I know I mentioned Bitcoin earlier, and Dwayne discussed or asked a question regarding miners. MicroStrategy holds the most Bitcoin of any publicly traded company right now, although some of those ETFs, spot Bitcoin ETFs, are now accumulating quite a bit more coins than this one. This one has a key range. It has a key range that is playable. And I know it sounds ridiculous, but this one could still make moves to the upside. The upside target for this key range points to 2400, which doesn't seem too far off. I mean, it was just at 2000 for a day. About 4 days ago, it hit 2000. What's another 400 points, right? So 2400 is that target. Look at where the key range low is. The key range low is right at 1200. From this low to 2400 is a double. And again, you might only buy one share or buy 2 shares and split a share if you want, and it's almost like owning a coin by itself. It's incredible how expensive this thing is already. But I would say that if this thing were to pull back, again, kind of like Bitcoin, somewhere between 1100 and 1200 could actually be a decent value buy for one last ditch effort to go rally and grab 2400, 22 to 2400 by the time Bitcoin halves. This thing could be looking at movement that takes you into that zone. Again, we'll see if we can get a pullback that takes us as deep as that 11 to 1200 zone, but if so, we've seen enough of key ranges here to know that this tends to be a great trap for a reverse to the upside and a shot to go get the full-on 100% target. Now another one here that is a miner is Marathon here. Do I have it up? Let me grab it right here. This is what I mentioned a little bit earlier, that this one's already seen quite the seesaw here. To begin the year, we had this as a double candidate off this key range, and if we could get 18 or even as low as somewhere between 15 and 18, we could double to about 36. And 36 wasn't hit, but 34 was. So anybody 17, 16, even down into the 14s, all of those prices doubled up to 34. We just missed out on 36, but that could still be ahead. But this is what I mentioned before here, is that these already look like they've been discounted quite a bit in a risk-off fashion. It hasn't really been trading against Bitcoin in a correlated fashion like you would want. But there still could be some additional volatility where this thing continues to pop. It looks like the trading range is in, and the trading range is, say, 32 to about 15. That's your trading range. Right now we're making our way down, and if you hit 15 again, 15 could still give you 30. 15 over here still got you 30. And then it came right back down, so you got to be able to protect that, protect your original capital on that one. So this one right here has been quite a bit more volatile than you would have normally expected. We'll see how the halving affects these charts, but I would say the quarterly pivots may be very useful. So far to begin the quarter, it's taken the quarterly close offered, and the close was close to the mid, which means that this low might be in play. And if that low is in play, you make your move down and discount, and then 14 could take you back up the way toward 28, and maybe even the top end of the range here. It could end up becoming a super large expanding range or something like this. So I would say keep an eye on the previous quarter's low in this case for this one. But this one did double in Q1, depending on where the entry was. And we could see that again this quarter, especially with some of the volatility that comes out of the Bitcoin halving event. Let's look at Roku. Roku is one that I'm very interested in, even though it's kind of died down here in a very compressed range. But I think that's why I've kind of gravitated toward this one a little bit here. And it's about where this range is developed. This is a large key range that developed here at the middle of last year. So you have that strong low to this high, back to this midpoint. And right now, if you take a look at this low here, this box has developed below that low. And a potential box reversal could be ahead. If you look at the top of the range up here, you have that key range high, and you had this box that developed. And as soon as that box failed, it rotated back to the middle, retest off the high, and dropped back to the low. Likewise, if it can push through the 67.70 again, it has a shot to go rally to 83, and then has a shot to go rally to about 100. That would be a pretty tremendous percentage gain. Not quite a double. Right now we're trading at 62, 63, but there could certainly be an opportunity where not only 83 is in play, but we may actually see a move to 100. Now, I would be still a little bit more patient with this one. This one has had a tendency to trade between 50 and 100, so that's a 100% of range there from 50 to 100. It's been back and forth, back and forth. You may just want to just kind of lay low on this one unless you see a transition day back above 67.70. You get a transition day back above there, now you're cooking with gas here for a shot at going toward 83. The other thing here is to close the quarter near the quarterly low. That quarterly low could be used as an opportunity for rejection. So if we can push through the low and reject, now you're working your way higher toward the midpoint of the previous quarter's range. That's right around 80. So there could still be a 25% rally from 60 to 80. That'd be a 33% rally actually, back to that point. So this one is kind of in the oven, as I would say. It's not actionable right this moment, but I'm watching it for a shot at the next move, especially after so much compression. This is like the car being at the gas station, fueling up right before it hits a cross-country move. So that's what we're looking for. We'll see if this thing can get a cross-country move out of that one. Another one here is Unity Software. Unity Software also has a Roku-like large trading range. This is $25, and the upper end of the range is anywhere between 44 and 50. So from $25 here, it rallied to 50 and doubled, then got cut in half, back to 25, then rallied to 44, then dropped back to 25. But for the most part, 25 has held quite well time and time again. There's been a couple of times it's got a little bit lower, and it still may do that this time around. But this one also has a very nice little rectangular range on these lows. It's compression, kind of like Roku. It's building that energy. I kind of would like to see it drop through 25 a little bit so that it dips its toe below and rejects. And once that rejection occurs, there could be an attempt to go get the previous quarter's high with a mid target here at the previous quarter's midpoint. That's the idea here, is if it can reject the quarterly low, you're snapping back to the mid and you're working back to the high. And that tends to be the play when you're dealing with these types of ranges. So big time compression here. It's had the ability. And what does a rejection look like? that's a phenomenal rejection. That's a big time trap in reverse. This is a moderate rejection. This is a huge earnings gap and fill rejection back above. We need something like that. We need something significant here to get the party started, and you likely get a return to 33 very quickly and make your move toward 40 at the very least. Could be a nice little move toward that edge. Another one here, mRNA, Moderna. This one has the potential here to make a really solid move to the upside based off of market structure. You have the 120 level here that has been the bottom of this trading range time and again. And then you have the top end of that level, which is around 200. So 120 to 200. Recently, it failed hard through 120, and now you see this rounded bottom. You can also call this an inverted head and shoulder pattern. It too is also in the oven, waiting to be done. And kind of like Roku, you may want to hold off until this one can demonstrate that it can push through 120. Once it pushes through 120, it's on back toward 200 or 190, somewhere in this zone. It has a very good path back up because of the previous market structure here. All of this energy built up into this rounded bottom / inverted head and shoulder. You go through 120, it opens up the upside in big time fashion. And even from a short-term perspective, there's a key range here that could be in play. So this impulsive move here recently in the last month has given us great levels to work with. The upside target of this range takes us to 136 up here. Kind of like Crocs in the last quarter. We had that key range, it forecasted 136, and it eventually got there. This one is very similar. It may have a shot to go get 136. And in order to do that, it's got to break through the 120. So if it's breaking through 120, 136 is, right in line with a shot to even go higher. It doesn't really have an entry just yet, but maybe something develops here soon. So that's a key range that could be very, very useful up ahead. We talked a little bit of NVIDIA. I do want to mention Tesla. Tesla here has gotten crushed so far this year. One of the things we mentioned early on last quarter was the failure here at the previous quarter's midpoint was not good. To fail right out of the gate into that mid was going to likely open up a push into that lower blue line, which is the previous quarter's low, and it eventually got there. So you fail at the midpoint, you drop into the low right here, and it got there. Now, one of the things I've mentioned here all of last quarter was you probably don't want to pay attention to this one as a buy candidate until it hits 160 at the very least. 160 is the market structure level that is below the 220 level. This one trades in 60-point increments. 280 minus 60 is 220. 220 minus 60 is 160. 160 minus 60 is 100. Look at those market structure distributions here. These have been phenomenal over the last year. One of our best buy calls was right in here for a shot at making the 280 level. So it went from 160 to 280. Once it got up here, we were looking for price to drop back to here and then trade, etc., etc. So to fail at 220 suggested we were going to 160. It got a low of 160.5 or something like this. And it's still trending down. It's still trending down. Today, not the best news. I think a downward revision in terms of, how much they were going to produce in terms of cars. And I think it was lower than estimated. And so they opened with a nice little gap down. I would say for this one, you want to watch price push below this blue line. That's the 160 level now. Because now you could be looking at playing the quarterly range. And if price were to push through this low, you have a shot at check marking higher to the midpoint of the previous quarter, and then perhaps working your way to the previous high after that. That could be the path forward for Tesla here, but it needs to wipe out more first. One of the levels I'm looking at down below that could be in play from a patient perspective, patience that is the 144 open gap. There's an open gap right there at 144. Can it go down there and grab that gap and then somehow recover 160? If it does that, it's going to move quite a bit higher and work its way back to the 220 level. So kind of like this one back here, right? It dropped below 160 and then it rallied up to 220. Can it do that again? Can it drop through 160, trap, and go back to 220? That could be the next 60 handles in Tesla. They're going through some crazy headwinds right now. But Tesla has the ability to bounce back. It just does. It has over time. It's withstood some tremendous selling pressure, short interest, and it tends to just bounce back at times. So once this cycle is up in terms of the down move, this one may have an opportunity to at least retrade 220. If not, maybe even a bit higher. But you got to wipe out that blue line first. Can it go get 144? I don't know if we drop into 100, but anything can happen, as I say. If it were to go to 100, then it would bounce back to the 160 level up above. That's the idea right there. So, yeah, we'll see if this one can make its move. It's been dead in the water to begin the year. And then Apple. Apple's another one that's been dead in the water to begin the year as well. This one's working toward the 165 level. I mentioned before that this one was likely not to be touched until we can get to 165, kind of like the 160 level in Tesla. We have this key range that developed earlier in last quarter, and that's forecasting a downside target at about 164, and we're almost there. These two are almost two peas in a pod right now in the way that they have given a bad name to the Magnificent Seven right now. You know, NVIDIA's shoulders are hurting from carrying these two the whole time. And these have really, really given a ton back. And Apple, in general, just hasn't gone anywhere for a full year now. 165 to 200. You got a midsection here at about 185 or so. And this is last April. And this is this April. So we have, again, a market here that's been kind of stagnated. They really haven't innovated quite well in a long while. They just gave up on their Apple Car concept after spending $1 billion a year for 14 straight years. And every iPhone over the last 10 years kind of looks the same. So, you know, a whole lot of headline risk that just hasn't been very favorable here. However, that's not to say that it can't bounce back. And it really, really starts with wiping out the 165 yet again. Just like the 160 level in Tesla. It has to go down first before it can go up. And, you know, just like this one here. You know, it closed it here, and then that quarter, it took out the blue line and went to the upper blue line, right? That's kind of what needs to happen again here this time around. It needs to come down here. It needs to reject. And then we might be looking at a continuation that takes us quite a bit higher up the range. So that's something to keep an eye on here for Apple. So I know I said a lot of negative things about Apple. I've been very pessimistic about this one the entire quarter. But after a bearish quarter is about the time where you snap back for some reason. Now they do also have the antitrust case that the DOJ has put against them. That's another thing that could weigh on resources, time and money, etc. And again, that could be kind of the lowest point we're at. Now I would say if this thing fails to hold 165 and can't get back above it, now you're looking at 150 or even down into the 140 zone. And that could get very hairy down below. So 165 a big time level for this one. I wanted to talk a little bit about Autodesk here. Autodesk with a great key range. Just love these key ranges, man. Really, really useful. Really help provide a lot of guidance in terms of key levels, entries, targets, etc. And this large key range has developed over the course of the last month. It hit the midpoint pretty quickly. The 100% target would take you higher toward the 312 level. Right now it's 248. Again, anytime we're forecasting an upside target, you kind of want it to break down first. And there's a trap opportunity there that can take you higher. In the case of a bearish move that cannot recover the key range low, you're looking for this thing to continue downward to the 100% target. So that could still be in play as well. But this key range has been tremendous here at keeping prices in check. And now we had a gap down here today on news of some sort here, which I'm not quite familiar with, but some sort of gap down here. That was pretty aggressive. And a lot of times, this looks like it's a delay of annual report of some sort, accounting issues. That could be quite bearish right out of the gate. So that tells you that you have a shot to break to the downside. If you're breaking down again, you're likely going to go reach the 25% extension at the very least from a short-term perspective. And that's a spot where you're going to look to see if there's a reaction. If it can reject and react, there's a shot to play it back to the midpoint of the range just as a short-term opportunity. But a failure here, and now you're marking to 230 and 212 down below. So that's a key range to keep an eye on here for some actionable trade ideas here up ahead. Yeah, that's going to be a big one there to keep an eye on. So those are a few of these candidates here. I also see VFC coming in as well. VFC, and right now been trending lower for this one. A decent key range that has developed here recently. But quite a bit of weakness month over month here. We do have some compression of the bands here. This one's been hit quite a bit here lately. I mean, look at this thing. It's just been down, down, down. On a 5-year volume profile basis, we're kind of in the lowest portion of that profile. Right here was the lowest, and we've seen it hold 14s every time since. So maybe it's getting closer to a bottom here, at least a short-term bottom. I would say that this key range right here is the one to look for. So you got that strong low right here, you got that strong high, impulsive move up, and then it pulls back the very next day to give you the midpoint. That range right there takes you from 14.5 to about 17.5. That's a 3-point range, so you're looking at about 20.5. That could be the upside target. 20.5 also corresponds with recent pivot highs. That could be doable. That could be doable. And like a lot of the ones that started the quarter weak and ended the quarter weak, you're kind of watching that quarterly low. Kind of like Tesla, kind of like Apple we just talked about. You want to see it attack that level and reject, and if it can, you're walking it back up to the midpoint of the quarter, which is 16.5. And best case scenario, you can take it to across the range to 19. But again, this one has had major weakness for a very long time. Can't get up off the mat. But when it bounces, it can get to 20 bucks. You know, in the best case scenario. I mean, here's $20 right here. Here's 21 bucks right there, and it's been in that zone even after a big drop it got there. What you're looking for is another reaction or rejection of prices below the quarterly low and make this thing move to the upside. So that's one where if it can get above this pivot low here, if it can wipe this low out and get above that zone, you might have some upside that could be there. But that could be quite tough there. Let's go with Meta here on the next one. Meta, another high-flying tech stock, very similar to Nvidia. It was able to give us a key range at these highs. Impulse move. These are very quick ones too. I mean, that's all we're getting is a 2-day pullback and a bounce back. You know, that's good enough though. It's good enough to give us a key range, and it sets the targets. The upside target for this one is 571. 571 is an upside target that could be hit sometime this quarter. The ideal entry would be somewhere between 464 and 476. So if it gets in here, there could be a trap that takes you back to 520. If it can break through the top here, we open up the 570 up there. In the worst case scenario, you're breaking to the downside here to go grab the 430 level, and you're kind of working inside that gap a little bit. But this is the type of key range you'd like to see after big time strength, because it helps keeps prices in check for a potential continuation to the upside down the road. It's better than just outright failing and giving it all back and filling the gap. So I did want to mention that key range here up ahead for Meta. I do see a question here regarding doing analysis from the start to the end on a naked chart. Probably a little late here to do something of that nature, but one of the things I do is start with just a volume profile. So there's a style on here that I call clean. This is clean and white, so white background, clean chart, and you can see just a volume profile from an indicator perspective. I always have kind of a 200-day moving average and my pivot-based EMAs. And then from there, what I try to do is identify the major levels from the volume profile that stand out, or any market structure levels. For example, you know, any LVNs in the chart, any HVNs, any VPOCs, and identify those levels because they're usually very important. I'll also, and this is such an elongated chart, it's tough. You know, let's go to Tesla again. It at least gives us some back and forth here. And what I try to do is identify where the major pivot extremes are in a chart. You know, where is it turning off of? It turned off of 400 up here. That's a good one there. You know, it turns off of this level and makes it support sometimes. You know, the 160 level similar. Again, this is a little messier than normal. And then sometimes what you'll see is that you get distributions that are equidistant to themselves. 60 points, 60 points, 60 points, 60 points, 60 points. And that can be just the beginning part of your roadmap. The LVNs are very important. I really like pivot extremes and where price bounces off the edges. And then you start to layer some additional analysis. Usually I might add PivotBoss pivots. And my PivotBoss pivots are basically looking at the high, low, and close and the midpoint of a prior period of time. I use monthly and quarterly, but I also use the yearly pivots as well. The quarterly ones are the ones we've been using here lately as we begin a new quarter. And those are helpful because, again, it tells you where the most important levels were in the prior auction. and then it gives you an idea of where we might be headed in the next auction. And so here's the previous quarterly high, low, and close in the mid. Those are important. So when Tesla was taking the close offered and taking the midpoint offered, we're now pointing to this lower blue line. It gives us directional conviction. And likewise, to close here near these lows, that's why I'm saying in Tesla here, if we're going to reject this area, then we come back to this pivot and back to that pivot. And then there's an outside shot that we may actually go back to this pivot. So quarterly pivots or monthly pivots or weekly pivots depending on intraday charts. For example, on my 60-minute charts, I use weekly pivots, and those were super helpful for the first couple of days of this week. For example, right here, this is your previous week's high, this is your previous week's low, that's your previous week's close, and your previous week's mid. It's getting a little jittery here with the reopen of the market, but that's your box reversal, and it fails at the high, so it works to the mid. You're failing at the mid. We mentioned we likely go grab that low, and so you get an outside week down. And so that's why tomorrow we're looking for the blue line to get taken out so we can rally back up the chain of the previous week's range. So usually I'm working with pivots in that way. And then you also have the PivotBoss bands, which are our standard deviation bands, and those help with identifying value on a real-time basis in addition to extremely over or undervalued pricing. For example, if Tesla were to drop to this lower level, that's 124.62 right now, that would be 3 standard deviations below value. This is VWAP right here, and it's VWAP that's year to date at the moment. So to drop 3 standard deviations below value would be significant and would suggest at some point maybe it's too undervalued, and at that point you would return price to value, which would be VWAP. And sometimes you tend to go across the value range to overvalued territory. So if you're looking at this from this perspective, it gives you something to eyeball here for a severely undervalued opportunity. Now when you're looking at those type of value opportunities, you don't want S3 to be sloping down this heavily. You want it to mainly be kind of flat. And then you come down here and maybe you recover and bounce. That's the best opportunity there. And if you look at last year, the high of the year was right at R3. This is value, VWAP, standard deviation 1, standard deviation 2, standard deviation 3. And that was the highest point of the year. We saw it when it happened. We noted it when it happened. And we mentioned that if we fall back below 280, we likely drop back toward about 220. So that actually helped us last year in identifying that things were too overvalued for that price. So maybe this thing makes a move and we drop into about the 124, 125 zone here. And again, that could be a way to use it. So those are the major indicators I use from a on-chart perspective. There are others as well, the color-coded stuff that's on the bars, and then I have my signals as well. Different signal colors means different things. This is a very useful tool, which is my advanced ADR indicator. It helps identify price range compression and expansion, helps you forecast. A lot of good stuff there that can be used. And speaking of, for PivotBoss Masters, we have our dates set coming up for PivotBoss Masters. For those of you that are in PivotBoss Masters, as you know, if you buy into PivotBoss Masters, you are in as a lifetime member there, and you have access to the entire video library, training library, and you have access to all the tools and indicators for various platforms that we offer. But in addition to that, we also have live training events that we host usually about 2 times a year. And the next one is coming up. So if you are already a member of Masters, we're going to be doing a 1-week live training coming up in a couple of weeks, and that will be absolutely free to you at no additional charge. And we're looking at April 15th to April 19th. So April 15th to April 19th is when we'll be hosting the next Pivot Boss Masters. That is in about 2 weeks, 2 weeks from yesterday. So we get the next 2 weeks to kind of do this, and then we'll be working on the 15th to 19th for our training sessions. What we usually do during those training sessions is look for, we use some of our proprietary tools, and we learn those proprietary tools, and then we look to engage those in the live market. And then those sessions are recorded, posted to the dashboard so that you can rewatch them and have them at your disposal down the road. The last time around we did our thrust reversal signals. Thrust reversal signals are these pink ones right here. And those are tremendous signals. These pink signals are awesome. And then we also did our squat paint bars indicator, which is where you get kind of the green, you get some of the blue, and you get some of these pinks. And those have significance as well. And we'll be working on some new scans and ideas for finding opportunities in the next Masters to come. If you are not already a member of Masters, you can jump on and get access to all of the various tools and training that we have. And again, you can be part of the live training that comes up at no additional cost. There will be more information forthcoming for all of you who are interested in Masters, and also for those of you that are already a part of it. So in 2 weeks here, April 15th to April 19th, we'll be getting after it for Pivot Boss Masters. Shortly after that, we'll also be doing a Swing Trade Pro 2.0 live sessions as well for those of you interested in swing trading with options. So good stuff coming up here up ahead. So in terms of the tools available for TradingView, only certain ones are available. I think the ones that are available to those of you that are currently in the premium trading room, so it's the same stuff there. Nothing has been built from a signal basis just yet or anything like that, but working on adding all the time. So those are definitely something, because I know we do have a ton here for those that use TradingView in different parts of the world, and even here in the States. And we do have those TradingView indicators. We also have indicators for NinjaTrader 8, NinjaTrader 7, Thinkorswim, and other platforms as well. But looking to add more as well. And the time of day, that's a good question here, Jen. One of the things we do here is we do a couple of sessions for learning, which are right at the market close. So we'll usually go at about 3 o'clock to about 4:30, and then we jump into the trading room bright and early at different times, depending on what we're doing. For the last time around, what we did was we did an 8 o'clock start, so that we jumped in right away with the thrust reversal signals that we're developing early in the day, and we went for about 8 to 9:30 in the morning. And then other times we'll do kind of a late morning start, say around 10, and go to about 11:30. So I kind of change it up throughout the week, and I mention all of that in the scheduling ahead of time. So we'll get that going here soon. So I think we covered a ton of charts, a ton of markets, a lot of great questions here. And for tomorrow, again, what we're looking for is for any early pullback to be defended. And if we can cross this blue line here tomorrow, which is the previous week's low, you start working higher toward the previous session's high, which is basically today's high. So that's what we're looking for heading into tomorrow's market. If we can finish tomorrow with a nice bullish session, we could be looking at a very nice follow-through over the next 5 to 7 days to the upside. So something to keep an eye on, especially from an equity index standpoint. I'd like to say thank you to everyone who joined me here today. We went 2 hours this time, so tremendous, 2 hours. And looking forward to putting this together so you can all watch the replay up ahead. If you're not part of the trading room, you can also join us at our PivotBoss.ecofin.com trading room there, and that right there is a great little spot for all of us to jump in, share ideas. I jump on the mic a couple of times a day, and we look for opportunities that day and also for the next day to come. And we look to identify opportunities that are actionable on multiple time frames. Folks trade options in there, futures, stocks, the whole thing. So a lot of fun. Thank you all for joining me here today. We'll be back at it in the trading room tomorrow morning. Everyone take care and have a fantastic night.